The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach, dear friends, do we go. And what's going on today? Well, as always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have? We're up 22 points on the S&P cash, up 60 points on the NASDAQ. Volume is good. I wouldn't say fantastic, but very good for this time of day, better than it's been in several times. As we said over the last couple of days and weeks, we were looking for this market to kind of hold up at least through May, or around the beginning of May. And we cited a few times that where the markets kind of held out till the first couple of days of May. I think the scenario sets up that we can do that. Of course, you know, we're not that far away from fund buying. In fact, really, we start next Thursday. So, you know, we got one more day here in the week. That's it. Of course, we got some earnings tonight, bigger earnings in the morning. That's kind of set the tone. The last, on Wednesday night, we had several. They were a little bit better than a lot of people thought. And we've had a lot of people piling on the short positions. Now, they haven't been piling in short in options on some of those. They haven't been piling in on the ETFs on some of those. But on the options and in the future, again, because of the low VIX, we find that many on the street are using that for their downside protection. And whether it's futures or options, you can get a squeeze out of there. The squeeze just isn't as good as those where you actually own the or short the equity or the ETF. But, we're up 22 points. Volume's okay. It's not fantastic. I don't see that there's any reason to say that we don't at least hold up till the first day or two of May. In fact, the way this comes out, May 1st, 2nd, and 3rd are the end of fund buying. So that's why we've seen a lot of markets tops hit around that 5th, 6th, or 7th of May. And we just don't know yet. I don't want to be projecting that I'm bearish now. I'm just saying if any scenario, I don't see a great reason to get all hot and bothered now when I think that the first opportunity is going to be that May week to get short. Not a lot of stuff that I wanted to be long today. Again, been pretty much all cash in the daily newsletter. I didn't want to be trashed in the chop of the last few days. I wanted to be able to make a better decision on something that would make me a gob of money, not trying to pick up dollars and pennies in front of a steamroller, which in this kind of chop, pretty easy to get. Saw a lot of people that were ready to jump out of windows on Wall Street last night. The end was nigh. It's all coming to an end. The bearishness. And, of course, normally when you get many people telling you that the market can't go any higher, what does it do? It immediately goes higher. I'm a big fan of not going out here and yelling and screaming that the market's going to go one way or the other, because the market gods have a way of making me extremely humble. And if you're not humble in this business, you haven't been trading real money. What else do we have going on? Well, let's get a little bit of history in, and then we'll get to the rest of what we've got going on.
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1812, mobs of manual labor smash burn a textile plant near Nottingham, England, enraged by its use of mechanical looms, which they fear will put them out of work. Inspired by their leader, Ned Ludd, an earlier and perhaps enemy of technology, they become known as Luddites, which still endures as a synonym for people who oppose technological progress. Over the decades to come, England creates more jobs than any other nation that yet had, even as its factories become more mechanized. And there's a great book that goes through the history of how technology tends to displace many workers for a while and then embrace them later, and just what happens. One of my favorite books of all time is a book called Rationally Optimistic. And I think we had the author on a few years ago. But an absolute great book for people that are Luddites that are saying, well, everybody's going to be put out of business by the robots. And the answer is generally, truly, when the robots come along, it does displace a lot of people. But at the same time, when these Luddites were busy doing their looms, they may pay up to 1/4 of their day to get a candle so that they could see that night. We now have electricity and light bulbs that mean that the first 2 minutes that someone works each day is enough to pay their light bill. So we've got a world that tends to overreact at the beginning of new technological booms. And, of course, a lot of people just hate progress altogether. And everybody knows those folks. They're the same people that say, I don't install my Windows updates, and I'm very proud of it. You know, we know what people are like that. They've got their crashed computers all the time. Back up early, install your updates. You won't get hacked. There's so many other people that don't. They're the easy pickings for the people at the bottom. But again, I love that book. He goes through, I don't know, maybe a couple hundred of examples of technology that was supposed to put everybody out of business. Workers that always kind of reacted like Ned Ludd. And eventually what you found out is that, yes, as people have more time, they do other things, and that leads to even more technological creations, and that employs even more people. And the cost for things like light bulbs or food or everything else in the world, electricity, has a tendency over time to actually fall as a percentage of what you make, and things actually get better. But a lot of people like to sell doom and gloom. The end of the world, the end is nigh. Repent today. And as soon as they start yelling that, normally I notice the S&P up the day later. So anyway, 2358, we'll be back. We'll start looking at some charts out here. Don't be a Luddite, kind of the theme of today, because Mr. Market will spank you. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Still up 20.5 points on the S&P cash. Trying to see if there's anything else going on out here. We got to 2361, and this is where a lot of people that were very bearish should have probably been waiting, because you just don't hit a high and then the market just falls apart. Generally, I'd say 80-85% of the time, you always get some kind of once again reaction back up to the top, and I think kind of what we're into now. One of the DEN members is asked to look at the semis and the SMHs and the SOXs. And this is basically what you truly are looking for if you want to go short. You go to a high, you pull back, energy kind of picks up, you have a couple of days with some decent volume down, and then you start moving up on a lighter volume. Does this mean that this will fall apart at this high today, 78.82 so far? Not necessarily. Again, you've got to look at the context. That is, we're going into earnings next week. We've got a good day in Apple. There's probably not a lot of downside to these foreign companies that have lots of cash on the side over there that they can bring back to the United States. I don't understand the overwhelming bearishness, mostly because I don't see it in the charts until now. Now, again, I've said it every day for a week now. That we have a light volume in the SMHs is meaningless right now. So much of the volume is coming in the last 15 or 20 minutes of the day that the only thing you can do is wait till the close to make a good decision on whether or not there's enough volume. And even then, so much of it comes in at the last minute as to be problematic. I don't even bother now until looking at charts until that night or the next morning before the bell opens. It's just, there just isn't a lot to hang your hat on until the end of the day. Now, on this one, again, you want to watch how things come in. We are right down here about halfway into this gap. And generally, I would say that if we were at the 15th of the month, we had 2 long weeks going on, we didn't have a couple of weekend fails, that you would probably just go ahead and pull the trigger here. I'd say right now it's a 50-50 chance that you saw a high today with the light volume. But again, what if that volume comes in at the end of the day? I would make a separate decision. So too early to make a decision for me. Volume is lighter at this time, but it's, we've seen double the volume come in the last 30 minutes in a lot of ETFs and other things for the last week, 10 days. It's just all the action is the big men on the street and those funds that are out there. So what are you looking at? Energy off the low was okay. It's pretty good. Energy on the way down was, we've already had kind of more energy on the way up, which seems ridiculous because we've had 2 big down days in that leg down. But energy has not been all that bad on the way up. But on just a chart basis, if you have some compelling reason to think that the SMHs are topping out, some fundamental reason, then you basically pull the trigger here and you stop out above that gap, which means that your risk is to 79.31. So not a bad trade out here, but my guess is that it will not pay off. I'd like to see one more signal and continued light volume. And again, not going to see that till the end of the day. I certainly wouldn't pull the trigger right now. I would wait until like the close. And if you see that the volume still does not come in, then maybe you could pull the trigger. My thought, though, is that the real damage that's going to be done in any of these, if it's going to happen at all, is going to be much more around May 1st to May 5th than it is this week. What else do we have out here? The SOXS. Take a quick look at that. SOXS. This looks to me like it's coming back down to the 734 level from March 24th. I don't see anything else. You did have a good sign of strength on the 11th, which is the opposite of what we saw. It's come back and filled it with lighter volume so far today, although the volume may exceed yesterday's by the end of the day. And again, just take a look at these the last 5 minutes before the close and look at the volumes. But being so close to the low, not seeing a retest of this March 24th low, I would still suspect that you're going to see a test of that 734 in the SOX. There, if you have a very light volume low, you might look at it again. But, you've had some energy come in off the top, and that would tell me that that 734 is much more likely than it was if they would have had no volume on the 17th, 18th, and 19th. So, again, I think you need to hurry up and wait. And my thought is still that we're going to see into the first week of May before there's a compelling reason of more than a day or two. I don't make intraday trades. So there's more than a compelling reason to own these things for some kind of swing trade that's 7 to 21 days long. And that's it. Okay, what else do we have going on? Of course, we had some earnings out last night. The big winner was I typed it wrong, SCSS. There we go. Select Comfort, a lot of people heavily betting to the downside. And again, there wasn't a lot out here that would tell you one way or the other. Things really been going sideways almost, since the end of February. So you're building a lot of steam. I just don't know how you could make a bet one way or the other going into this, but a lot of people were short this thing and got squeezed out today. Nice big move for Select Comfort. They've had some acquisitions and those things are actually starting to do a little bit better now. Some of the other stocks that you kind of have to take a look at and see that with the possibility of making lower lows is that energy sector. I've looked at a few of them. It just looks like a handful of these things might be making a low, but I really don't have clear signals. Again, looking at the very end of the day for volume on these. In fact, let's take a look at some of the other ones out here that I am looking at. The XLP was one that has and did test its previous high, and volume shrank 25%. We go back and look at July 14th of 2016, got to $55.26 on 20 million shares. The best we were able to do is we got within 0.5% of the April 18th high, was 15.5 million shares. This thing's back into the trading range now. And, you know, again, not a lot of difference on the energy up and down. This speaks of a much bigger trading range in some of these things like the XLP. We'll be back shortly.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we said, going to be one of these things on the XLP that you had lighter volume, 25%. The way I look at it in these ETFs, if you get a high that is 25% lighter, it is the equivalent of a equity, a regular company in a stock having less than 50% of its previous volume. And again, just looks like these things are just have some very big swings. So this one from $55 down to $50. Yeah, so what? Actually, almost about $6 out here for a trading range in the XLP. Let's see what else we had in here. BBY. Take a quick look at this one. Another one hitting a high out here. Volume, going to be a little light today. 3.3 million shares. You need 7 million shares. I don't think this one's going to make it by the end of the day, but that December 8th, 49.40 high with 7.33 million shares looks like that's going to come in a bit light out here. Energy off the March 1st low is okay, but less than the energy down on some of the legs. Now, that sets up a kind of a bigger trading range from this big move from the 17th of November up on 25.5 million shares. Is going to be kind of a tough road to come in here and bust through that $41. My guess is that if, especially in this stock, which is very seasonal, if you get around September and this thing's at $41 on light volume, you might have a nice trade going into the fall, but kind of tough to see much. CVX, which is a Chevron, back into this first gap, had more volume yesterday, a little bit of a bounce today, not so much juice on the upside today, but not a bad looking company in the way that it could have a nice move back up to about 115. The question is whether or not this low out here holds today. And what you're going to need is probably 4 or 5 days of this thing basing out at about 105, 106, and see all the volume start to disappear. You know, you probably would have liked to seen this up today with a sign of strength that you have not got. But this is where support is at 105, and you can keep an eye on that one, and it might tell you when energy itself is looking at turning around. ACCO Brands, ACCO, this thing making a big W up here at the highs. Not a lot of juice out here today. Could it get back into 1445? I think you want to wait for that for the signal, but it's kind of up into those high volume areas. And today, 140,000 shares going back into that candle that had 1.7 million shares on the 22nd of February. So you have to look that. Again, talking about energy companies out here getting close to maybe making yet another low. We played in the path of least resistance, the low that kind of came in Apache off this $50 low. I think what would we sell them? $54 or something. Wasn't a huge winner for the newsletter, but always better than a loser. But you had a nice kind of low coming in here right around $50. We might be getting that again. We got to $49.01 yesterday, and a little bit of a bounce, but not much out here. Again, probably want these things to base out a little bit if you're thinking about higher in these. Anadarko, this one again kind of coming into the support range right here at about $59. Not a lot of juice either. These are not bad looking charts in the energy sector. Now, the only thing is, will these lows hold around $59 for APC? Again, I'm waiting for these things to kind of go sideways for a few days. If we went sideways for a few days and saw next Wednesday that these things were holding and not a lot of volume and not a lot of selling, we may have put in a bottom around this $50 level in crude, but we'll have to wait for a few days to see. I don't think it's going to be one and done. I think it's going to take a few days to get a lot of these things out of the way. So, Commercial Metals Corporation, another one out here looking fairly decent. You had a good sign of strength back here on the 9th of November. You did so on about 7 million shares, come back into it again yesterday with 1.7 million shares. So a fairly good looking chart. I dislike that the energy on February 16th down to the low of yesterday actually kind of increased. So again, if energy increases on the downside, the thought is that you're not going to get a V bottom. that you're truly going to get more of a consolidation and then possibly a move back higher. What else do we have? We were talking about Heartland the last couple of days, so we want to look at that. No big signal out here. It's just kind of flat, but still into these huge signs of strength in November 7th through 8th and 9th that are acting as support. So I'm watching those. Just a doji today. Of course, on the back of good earnings last night from, what is it, CSX, was it? What else was it? Was it another train company? This is back up into this gap we've been talking about. Of course, the gap down, KSU gap down on a huge sign of weakness on the 9th of November, did so on 13.3 million shares. Gets into that again on November 22nd, again on March 1st, again today. And everybody knows how much I just love these stocks that have double gaps as signs of resistance. But again, once you get to $90, it's very tough not to go to 100, and that would make it very tough for me to say pull a trigger on these trains short. I still don't see it. You can give me a call at 877-927-6648. You can email me at path@tfnn.com or post a message in the den. Good question in the den asks, why is BBY, Best Buy, not getting crushed by Amazon? That is because they've decided to actually do a couple of things. That is, they really will price match e-retail prices to some extent. They've decided that there's a lot of people that will not buy a TV without walking into a store, and they've taught their salespeople how to close the sale very quickly on the floor. So there's a few things. One, they actually have people now that seem to know a little bit more than nobody. That if you go to Sears or the rest of the places where you can buy a ultra high definition television that sells for $2,000 or $3,000, there's generally they are spending some money on education, so that people are feeling fairly good about spending the money at Best Buy. They like the fact that there has been some training. And my early days of one of my first jobs was a high-end audio, video, and computer store. And for a company our size, we went up against Best Buy for a long time. It was education. We had people that knew stuff. The people at Best Buy were dummies. We don't have independent stereo and those kind of stores really around the United States anymore. But Best Buy is the best house in a bad neighborhood where no one knows nothing. I guess that's it. The last man standing. Probably it.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We were talking about Best Buy and technology and why they're kind of the last man standing. Radio Shack bankrupt. But one of the other things, besides making a lot of hay on the big screens lately, is that they've really figured out how to do the store within a store. Whether it's Microsoft Surface laptops or Samsung superphones, and along with Apple superphones, the number one retail seller of those $800 phones, which have quite a big kickback, is Best Buy. If you don't buy it directly from the vendor, like Verizon or somebody like that, you're more likely to buy it directly from Best Buy than any other retailers, online or nothing else. So they have quite the business. And, of course, they call it a store within a store. But the two really ones that shine there are Microsoft Surface tablets, which they've done a land office business in selling them. They may have sold 3/4 of all the Surface tablets for Microsoft. It's rather huge, actually. But then you have to look also at that cell phone business that they do, and they make a ton of money off of it. But those are the only, when you walk in there and you're expecting to find anybody that knows anything about anything, those are the three places in the store that I found people that actually know anything. The rest of the people know nothing. You wander on over to the next aisle for Dell. They really don't know much, don't really care much. Found out that at least here in Tampa, I've gone in several times to a couple of the Best Buy stores. And the people that had the shirts on that made you think that they worked for Best Buy were actually employees of Microsoft. So that may give you another idea of how well these guys are doing the store within a store business. It's really tough to find out who works for the company that built the product and who works for Best Buy. But they'll bring a ringer into the store, and that ringer will infect the other people with his or her knowledge. And then they go somewhere else and leave people with a little bit of the knowledge that they need to sell it. Again, these people are not going to be the absolute best, or they wouldn't be at Best Buy, but they're good enough to help you with your decision if you know less. And that's pretty much it. Anyway, we were looking at some of these other stocks. We'll get back to them. Talking about to one of the dinners earlier today about T-Mobile, and an interesting conversation he saw about how the CEO of T-Mobile tortures everybody. I've had a long-standing opinion on T-Mobile about what the CEO is doing. That is, he's busy putting his thumb in the eye of anybody in his industry he can on a daily basis. To do that, and of course, I think the comments were about the ads where they're talking about going up one-on-one with Verizon and how effective their ads actually have been for T-Mobile. No sign on this thing stopping. You got a couple of dojis out here that would make me start to worry. And is there much to the upside? Probably not. Not a lot of volume as we tail off to the side here. But again, this guy's building a business by torturing all the other people in the industry. Eventually, they're going to say uncle and just buy this company out. I don't know exactly when that is and how it's going to work via the regulatory process. But I don't think that he can continue this way, but he can sure make life horrible for everybody else, including Verizon. And I think that's why I couldn't be short this thing. There's always the chance that someone's going to come in there and do the right thing, which is get rid of the biggest thorn in their paw or rear end, depending on where you think that thorn should go for a cell provider, and find out. But that's it. We were looking at Microsoft yesterday a little bit too, speaking of Surface tablets. And, you saw some decent volume on the way down. Again, just these very narrow trading ranges. You don't get more than 1 day. I heard somebody saying that, the S&P had, count back up here. I don't think you can make a decision on any of these indexes by a single day or a single signal. I think that what you're looking for is something much bigger, and that is some kind of trend reversal signal. And, even in Microsoft, biggest down day really since the April 5th reversal at the high. But you would have figured that would have continued today, and it didn't. And everybody that wants to make a decision on some of these, especially these big cap companies, Amazon, or Microsoft, Facebook, all the rest of them, there's got to be a trend. I don't think you can make a single candle decision on any of these days. In fact, Microsoft, a lot of people predicting the end of the world for Amazon last day, and I didn't see much in that one. Now, again, you really need to see this thing close below the 3x3 displaced moving average. This is not a bad setup. I'm more likely to say that this thing's going to 1,000 than below. But if the entire market decides to drop the big one, this is not a tremendously bullish chart. It's just once it gets to 900, I'm loath to short a stock. But these things are lining up. We talked about it with the SMH is the same thing, is you need some kind of additional signal out here with this pullback. And that signal is going to be something like a close below the 3x3. We've had these days underneath it. We had it up. As soon as I start seeing a few of these stocks start charging this 3x3 and closing underneath it, I'll be much more believing that this market has topped out. I just don't see that so far. So we've had that. Oh, I wanted to look at Apple. That's what I was looking at, because yesterday I heard a lot of people predicting the end of the world for Apple. I just didn't see it. The volume didn't come in all that strong. And even though everybody wants to report that taxes are dead in the House and the Senate, and the medical bill is dead, all it takes is 24 hours for 20 votes to shift like we got today, and healthcare is right back into action. So I'm very reticent to say, like I said, and any of these, to start saying that one day is any kind of signal. We are looking for some kind of trend, and as long as these things continue to stay above these 3x3 displaced moving averages over the next week or so, I'm going to be very hard pressed to get all bearish and dour about the future of the markets. Again, we could have, this is a beautiful setup into the first week of May. That may not develop, but it's very tough for me to get all rainy, dour. I need some more sun. Any? No? No? Class? Bueller? Be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. Yeah, good call yesterday. Mr. Fletch in the den, he was wondering about somebody getting a golden parachute to exit stage right. Looks like he's right. What else do we have going on out here? Oh, we were talking about a few of these other stocks, so we want to take a look at them before the end of the day. Again, there just aren't a lot of signals. There's certainly no confirmation. A little bit bigger pop out here for Facebook. Again, it's tough for me to be incredibly bearish on this market when you get the kind of press that Facebook gets or the kind of press that Google's getting in Europe and see the stock continue to move higher, whether it's lighter volume or not. I want to see some kind of reaction to bad news if a stock is weak. And these stocks have had bad news and haven't reacted to it. Let's take a look at Google real quick. Google, I've had it in the Tech Insider. If you look at the foreign press, it's just absolutely being savaged on a daily basis. And guess what? Stock keeps moving higher. So is there a lot of volume in this move? No. Will the bad press eventually affect this stock? It seems like it doesn't matter until it matters. It's just until we I start seeing some closes below this 3x3 on an ongoing basis. It's very tough for me to say, hey, everything's kind of turned down. Now, the one thing that kind of bothers me out here that makes me think that you could possibly see the NASDAQ turn quicker than the rest of it is the summation index. Let me pop that up. I've got this in my newsletter every day, but I wanted to, where's it at here? Okay. Wanted to show this because the one thing that does kind of look weak out here certainly is the NASDAQ summation index. And this is a little different than maybe the ones you've seen. If you're unfamiliar with it, this is an oscillator of 19 and 38 days of the advancers and decliners. There's a NYSE version of this and the NASDAQ version of it. This one has had some fairly consistent selling in the NASDAQ, the big NASDAQ, not the 100. And this one kind of shows you that if you are thinking of which index is weaker, that certainly that this NASDAQ summation index is the weaker of the two. In fact, well, I'll show you the other one here real quick. I've modified this summation index a little bit. One of the problems with the summation index is that it depends on where you start, i.e. a year ago, 2 years ago, what the number is actually going to be. The numbers really don't mean anything. So I just basically average it out, so it should be around 0 for whatever time frame I'm looking. In this one, it's a couple of years. So it isn't so much the number, it's above 0, it's below 0, that kind of thing. It is the direction of it compared to the direction before. So really just kind of disregard all the numbers you ever see in a summation index. But a pretty good oscillator. Now, the one in the NYSE has been going up, and it has been going up literally for 2 weeks. It hasn't really turned down. It kind of got close to it yesterday. But again, no real movement out here. Still one of the better indexes out here. NASDAQ's weak. The NYSE is kind of the bullish of the two. If you wanted to get bearish, I think you got to see the NYSE turn down, which hasn't happened. Certainly not going to happen today. Advancers and decliners, very good for this. We will see you tomorrow. Same bat channel, same bat time. Remember, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.